Welcome back, everyone,
to another week
of your favorite crypto podcast,
Sometimes Crypto,
the Unscripted
Crypto Podcast. Ayo.
Hey, yo. We're back with the technical difficulties, and it's out of our control. What else? You know what else is out of our control?
Just a little delay. But what is out of our control with him? I mean,
This
there's a lot of things.
this bloodbath that's happening.
Yeah, the markets are tanking quite heavily.
And it's not even just crypto, it's everything.
Yep.
Stocks
I mean, we're approaching that 1 month mark.
Tanked.
You know, the 1
What
month
1 month
mark for government shutdown.
Oh, no, we've already passed it. We're at 35 days. We're tied for the longest shutdown.
Oh, wow.
Yeah, remember. Oh, yeah. I think we're at 34 days. Because the shutdown started October 1st.
Wow. Yeah, been a long time. A lot of people are not getting paid. So they're probably drawing out the funds that they got available to them in the markets, short-term investments. It's not looking pretty.
Oh, I don't think those enough of those people are invested to be there. But maybe I'm not gonna disagree with you on that. I'm sure that's contributing.
So it's just the government being shut down. Period is what it is.
I would. So I'm not going to sit here and say I know what's actually causing the market to tank, because I don't. There are speculations that the prolonged government shutdown is one. Two, I saw people talking about the fact of that I think Friday. Do you remember when we talked about, I think maybe a month, maybe 2 months ago, we talked about how the Supreme Court is taking Trump's tariffs to court, essentially, to either decide if they're gonna if they're opposing those tariffs the way they did is a excess of power or overreach of power. So I think the decisioning on that starts tomorrow, like
I see,
the full thingamajigger. Mm-hmm. Let me confirm, because I do have I had it here. Let me pull it up. Let me look for it real quick. Give me 2.25 seconds. But I saw a lot of talks about that. That's a core factor. The exact talks, like the exact info on the courts thing.
Oh, I see.
Mm-hmm.
I wonder which way they're leaning on.
So this is what they're saying. Oral arguments start tomorrow, and there should be an estimated decision expected by early 2026.
Okay, so oral arguments start November 5th.
Correct. At 10 a.m. Eastern time.
Oh, that's gonna be fun. I might stream that tomorrow.
So I assume the market is. I assume markets are starting to speculate what can be said, because I think they're gonna get a pretty good notion on how things are leaning quite quickly with the first couple of once oral arguments start.
Yeah, pretty much.
And
I wonder who's going to be talking also.
Also, to add, I also assume that it's a lot of pressure, because if they were to say that what Trump did is overreach of power, then we would have to return the $200 billion we have collected.
Oof,
from tariffs to the country, to everyone who has paid it, which is a lot. You know, can I share my gripe with this?
Of course, go for it.
I love how everything is like, oh, they have to pay back what they got, what we received from what the U.S. received from funding. But no one ever talks about the person who had to buy the more expensive thing. Like mind you, I was here for tariffs, right? I was not against tariffs. I was against the way they were implemented. I don't think they were truly reciprocal. I think they just did, as we talked about, what's the deficit between countries, which I don't think it's a fair way of doing it, or not the best way of doing it. But I am an advocate for, if they have to return funds, I would like the people who had to spend the extra change to get some of those funds back. Never gonna happen, right? But like, still kind of messed up, right?
Yeah, now that you mentioned that, that is true. These companies are going to get their money back, but they have already sold their products at the higher price point. And now they're like,
plus,
just going to get money come in.
Plus the markup, right?
Mm-hmm.
Because it's not like they just... I'm sure some companies probably didn't really mark up that much. I'm sure others did. But I'm going to assume majority of companies that were, like I said, I'm not going to bring prices down. I'm going to willingly increase them and just blame it on Trump. We're like, no, here's a little markup while we're at it. And they're going to, like, it's... I don't think that's fair. I am a free market capitalist to a degree, but I do think some things, there should be more fairness in the game sometimes.
Yeah. So there are going to be 3 people giving arguments, actually. The person that's representing the small businesses, they are pretty much presenting the challenge, which is Neil Katyal, and another lawyer that's going to be representing the states that are also against the tariffs, and then finally someone that's on Trump's administration. Speculation is U.S. Solicitor General D. John Sauer. But I guess we'll have to wait till tomorrow to see.
Yeah, I'm sure that's not going to help the markets.
Yeah, these are just speculations on who's going to be, or like rough estimates of who's going to be.
Yeah, but that's going to be a thing of itself if Trump's administration were to lose that would be, one, a crazy hit on the U.S. market, and 2, that now means that moving forward, not just Trump, moving forward, other presidents can be pushed back against, as they should be, right, towards with the Supreme Court, and now there's a clear limit of power
for tariffs.
Not tariff, no, and moving forward, anything they do. You can now challenge anything.
I mean,
they had precedent,
but they had precedents if this challenge gets approved.
If they win, if the small business and the states win, it adds precedent that you cannot just, because the way he was able to use it or establish these tariffs was, it was emergency something. It was national emergency. So Trump invoked IEEPA shortly after his January 2025 inauguration, declaring a national emergency over the 1.2 trillion U.S. goods trade deficit. Meaning that I would assume if other presidents were to use the same thing of national emergency, there could be heavy pushback on it.
I see. I mean, well, obviously they could be pushing it back, give pushback on it as it is, because if they weren't able to do that, then they wouldn't be able to take it to the court. However, I think what's going to be affected is how the president can declare a state of national emergency, and what specifically for this particular thing, whatever you just said. That particular thing is going to have more defined rules, and I don't think it's going to go much further than that, because they're challenging this state of national emergency based off of whatever clause that is.
I agree with you on what you're saying. I don't exactly agree. I think it's one of those things that lawyers do where, not a lawyer, but where they would bring up like these other cases that show these other types of presidents from other industries to include in something else. So I think there could be overreach.
We're gonna have to wait and find out on that one, because I mean I don't necessarily see it for this particular situation.
I mean, that's kind of how the way precedent works. You add it for from my understanding is you add it towards anything that could fall related to that thing.
Mm-hmm.
So I would assume it will be anything that is declared national, not just this.
Yeah, we're not lawyers, so I don't think it's gonna be too beneficial to be going back and forth on this one, in all honesty. But my assumption, just to give my assumption, is that the presidents will be set based off of the reason for which the national emergency was declared.
So can I add more context here? So that specific thing we just said, IEEPA actions. So from 1979, these are multiple presidents have done it. So President Carter, Iran hostage crisis, froze $12 billion in Iran assets. 1995, Clinton, Yugoslavia wars, sanctions on Siberia. George Bush, 9/11, froze Al-Qaeda financing. Trump, 2018 to 2019, China tech threats, banned U.S. investment in 59 Chinese military firms. Biden, the Russia-Ukraine war, sent $300 billion to Russia. Now Trump again. So I think it's a big branch of like different things they can do.
So I just searched it up. It's the International Emergency Economic Powers Act.
Mm-hmm.
So it is it's not a national emergency, it's an international emergency.
Well, national emergency for us.
International. This IEEPA stands for International Emergency Economic Powers Act. Enacted in December 28th, 1977.
Mm-hmm.
So yeah, there will be presidents for this in particular. But yes, it does have a range of things. As you mentioned, that there are multiple scenarios where it was enacted.
Yeah. It's I think it's similar to like how, so as I do, I was looking up other things, and this is from a while ago. So you remember how early on in Trump's, like as before Trump even got into office, there were bets on poly markets saying how many executive orders will be signed, and how he has signed some on day one, and how he has signed some of the most. So apparently, before Obama, there were actually way less executive orders signed. And Obama was one of the first presidents that signed a large abundance of executive orders. And that was just followed by Trump, then Biden, now back to Trump. And the speculation is, moving forward, the presidents that follow will just sign more executive orders than the president prior. Which is why they've been saying like Congress has the power to make these things, but they're not really used, or like they just let it fall on the president to like sign an executive order and like get it done, instead of going back and forth with each other to do things the way the system was created. What are you searching up over there?
How many executive orders were signed
by president?
By president, which is a Wikipedia page. And it looks like Trump is definitely the one with the most.
Yeah, I'm not disagreeing with that.
Yeah, sitting at double all the other ones.
Yeah, I'm not disagreeing with
including both terms, because there's a very good portion of the ones that he signed now, that are what's it called? Actually, hold on. What is this? Starting with EO no, and then number issued. Okay, so I might have been looking at the wrong number, but Donald Trump, first term, signed 220 executive orders, and this term, 210, according to, as of October 15th, 2025.
Yeah.
But then the one who actually signed the most was Franklin D. Roosevelt.
Yeah.
3,721 total executive orders.
I'm also not saying like, but I'm saying has it been like from 2000 till now? Our early history, not Roosevelt.
So, nah, I mean, it's going back. Like, these presidents have signed a lot of executive orders. So we got Trump. I'm going to go backwards in time. Trump's second term, Joe Biden, Trump's first term. So Trump's second term, 210. Joe Biden, 162. Trump's first term, 220. Barack Obama, 276. Bush, George W. Bush, 291.
Wait, that was 276 total for both terms?
Yeah, it just says 276.
Okay.
It doesn't say anything about first term, second term. The only ones that say first term, second term is Cleveland and Trump, since they're the only two presidents that have won non-consecutive presidencies.
Got you.
Clinton, 364. Bush Sr., 166. Reagan, 381. Carter, 320. So like Eisenhower, 484. Truman, 907. Woodrow
Jesus.
Wilson, 1,803. And Theodore Roosevelt, 1,081. So yeah, presidents have been signing a bunch of executive orders. The only one on this list that hasn't signed it, that never signed an executive order, was William Henry Harrison. 0 executive orders.
So I'm gonna retract what I said then, because I just put it up too so I could look at it, so I could see it. President been signing executive orders up the wazoo.
Yep, pretty much.
I'm gonna retract everything I said. By the way, I was completely off. Wherever I heard that information from is completely wrong. There is a metric crap ton of presidents signing executive orders.
Yeah, I mean, yeah, they all sign executive orders as part of their job. Essentially, they are the chief executive officer.
Yeah.
Essentially, commander, chief of command. What is a president's actual term?
Commander in chief.
Commander in chief.
Oh, Jesus. I feel like an idiot for saying what I said now.
You gotta double check your facts, William. Can't be pushing out false information like that.
No, we love pushing out false information. We love it.
That's not true. That's not true.
I would assume people would assume that's not true.
That's not a safe assumption.
So it's a safe assumption to assume we're all idiots then?
I don't know how you're making that jump in logic.
Okay. Now it's recording again.
You good, William?
Okay. So this gave an error on Ableton for some reason, saying it wasn't supported and then it shut out.
I do hear you.
But should be good now. But no, obviously we're not fans of false information. That's why I feel like an idiot for saying what I said. God damn it. Well, I think we should get into the fun stuff.
Oh, there's fun stuff?
I mean, Bitcoin did hit today 99,000, right? I think that's something worth talking about.
Yep.
I'm a little better.
Bitcoin dropped below the $100,000 mark.
Yep. I think that's I think we should. I mean, it's bounced. Well, let's share screen. Let's get into it. I think it's worth a.
Yes, sir. Chart review.
I think it's time. I think it's been long enough. I think enough has happened since then to get into a little bit of a chart look at, a little bit of chart overview. I was making my screen full screen. So last week we were sitting around. Mind you, I was also wrong. We did not push up how I thought we were. I thought we were going to hold way better. I got stopped out on the trades I had like almost immediately after the episode because like market fell off a cliff like days afterwards. So we rejected on resistance just a bit. I thought we were going to push through it. We did not. This was 110. We were right around here, I assume, right?
Yeah.
Where were we last week?
31st. 30. Oh no, not 31st.
When we recorded,
we posted on the 31st.
We recorded 2 days before, 3 days.
3 days before.
So we're actually doing really good. Actually, we were around here then, somewhere here in this range.
The 28th or the 29th.
So this is 26th, 27th, 28th. So I assume we were probably here, and I said I think we should hold because we just finished pushing up. It should hold, and there should be a move upwards. I was wrong. I was wrong. It did not do that. It completely rejected hard and pushed down. Assuming it could have held here, it did not. It continued to push down, and then we just lost levels. There's a lot of fear in the market, and we're currently sitting, and we have broken down. We have broken below the prior wick low from the 9th, and bounced off basically 99,000, and also the halfway mark of a Fibonacci retracement. So just to preface, typically most things that a pullback here is really bullish, pullback here is bullish or bullish, you know, like it's still very confident. This is a full-on 50% retracement. There should be some sort of move here, and then this is a sweet spot to capture a trade because there should be a solid amount of support there. In terms of you look for, that's like we have fully retraced over half of the move we just had upwards. This should be our next biggest and strongest support zone. Make sense?
Yep.
So we currently are bouncing off the 50%, meaning we have retraced 50% of our move upwards from the previous low.
So the Fibonacci lines are the white lines.
I have two of them. The red ones
that's why I was confused.
They're both Fibonacci lines. The red one is a shorter time frame compared to the white. This white one here. Let me do this so you can.
You're gonna hide it real quick.
No, I'm not. I'm gonna just make it red. So red is a shorter time frame, and the white's a bigger time frame from a much lower position. So this is what I'll show you now. So
I
this
see the diagonal white line. Oh, you're talking about the diagonal gray line is for the red.
Correct.
Okay.
The white is for the longer position, the longer move. That's from 48,000. And this one is all the way from 75,000. So essentially from retesting, this was taken from retesting this right here, this area, and all this mess. You can clearly see this is when we went sideways for a really long time. And then this one was taken from when we broke down from breaking resistance, double top, coming back down and made it, and we retested this prior all-time high, made a new high, made a higher low, and we're currently in a similar position, retesting the previous higher high, you can say. So bullishness would be if we were to hold this new possible support zone. We don't know if it's support yet. It's not fully confirmed until it bounces and starts pushing upwards, right? Ooh. So as of right now, we're on a new support zone. We can also, If this decides not to hold this level here, we can potentially go down further to 618 or even this 96, which they're pretty close together, right? So on the bigger time frame on this white one, it's still a bullish move because it hasn't retraced that 50% that's down here. So still be bullish, and this would be like a maximum, just pure perfect technical confluence just on fibs. Make sense?
Yep. That would be a good point of like,
if you still believe the bull run or the markets or I wouldn't maybe momentum, maybe just like a good support zone or a very strong support zone. Now, if you still believe the bull run is on, it's a great zone. So let me jump out of here. Before we jump, everyone keep this in the back of your minds. I'm going to jump now to Bitcoin dominance. As Benjamin Cowen said, he's been waiting for this 60%. I said there's a good chance we'll get to 60%. It's also a good chance we get a good rejection here to potentially push, to potentially start moving alts, rotating capital from Bitcoin to alts. We're finally here at this 60%, no spike, good green candles we're hitting. It spiked all the way up to 61.38 today. And it's closing below because there was a little bit of resistance with the 200-day moving average, if I'm not mistaken, if it did not change it. Let me confirm.
The red
one, 200. Yeah, 200. It did not change. So we want to see dominance top. It can top. It's probably getting to a good oversold territory by now. Like super oversold on the 3-day, almost oversold on the weekly. So we could see a potential pullback on Bitcoin dominance, which would be great for alts because it is in a rejection zone. However, dominance is quite bullish, if you look at it, like it's very strong. So it's very much Bitcoin season.
Mm-hmm.
That has not changed. So ideally, want to see this reject and work its way back down. And following that, this is actually this is bigger, like much more of a
bullish
important. No, bearish, not bad. I would say more bearish. USDT dominance has gone up greatly, and it's in two potential zones of rejection. Like it did today. It spiked up all the way to 5.5% and rejected just below 5.84%, meaning this is the amount of money in USDT. And if you notice, it has made a ginormous comeback from where it was. Like,
for clarity, it's the amount of money within the crypto market that's tied to USDT.
Yes.
So 5.5% of all crypto assets are in USDT.
5.5% of people are sitting in USDT of money, of the total market cap.
Yeah. Yep.
I don't know. I feel like the way you said it confused me a little bit, so I want to say it my way just in case.
That's fine. I just wanted to make sure that the people listening also had a clear way of understanding what you said.
I understand. I agree with you. So we're currently working our way to a potential rejection zone. Mind you, if USDT dominance does push up and does break above this, alts will definitely be bleeding, especially if Bitcoin decides to tank and Bitcoin dominance decides to go up, as we always say.
I mean, Bitcoin dominance goes up if alts are bleeding.
Not necessarily, right?
If Bitcoin stays the same and alts start to bleed, Bitcoin dominance goes up.
for the most part, right?
But it's actually, alts excluding stable coins.
Yeah,
because oftentimes the people would be selling their alts into stable coins, and that's still not Bitcoin. So that might it would have to switch from alts and stable coins into Bitcoin.
Okay. So just so you can compare, look at this candle. This is the same daily candle. It's a very aggressive candle. It's an 8%. It's almost a 10% candle. The majority of the candle is still filled to the upside, right? If you look at Bitcoin dominance, the majority of the candle is not. Oh, we just started a new day.
Yeah, UTC.
Yeah. So the majority of this candle, though, look at the size, is a 1% candle, and the majority of that candle was not filled. I mind you, there you also have to take account market ratios, right? Because of the size of Bitcoin compared to USDT. What I'm just trying to point out is the majority of money did not move out of USDT. It stayed in, while the majority of Bitcoin did not stay in.
Yeah, correct.
But alts, on the other hand, still did bleed. If you were to compare it to Solana, look at that. This is on the daily.
Major losses for Solana.
Exactly, and Solana looks quite bearish in my opinion, because this is ugly. See what I'm saying? That's why the correlation is
because we just mentioned how they just got their first ETF.
Oh, bro, I bought in. I'm gonna have to buy more. But yeah, so things are definitely looking a little shaky. Alts are definitely bleeding because USDT spiked really hard, and dominance also has spiked really hard. So remember I said hold this thought, because I want to also share this. This is something Benjamin Cowen said that I think is interesting news.
What do you say?
I think it's no. I'm gonna pull up his chart so you can see it, and then also read the tweet.
Oh, I see. Benjamin Cowen.
Mind you, I do take what he says with very little grains of salt, apart from him being very Bitcoin maxi and all these things, and maybe a little more conservative than the rest of everyone. But he is nonetheless a technical analysis expert, and his information is 100% valuable. So this is what he wrote as everyone's reading. Bitcoin is at a critical level. Multiple closes below 50-week would confirm the top being in, as it always has each cycle, regardless of whether the top is in or we go slightly higher. I still think 2026 will be a bear market, just like the prior midterm years. He has never thought anything opposite. He has always said it's still a 4-year cycle. He's been very consistent on it. So, mind you, to confirm Bitcoin in a bear market for him, oopsie daisy, I'm putting full screen on my end. This candle Bitcoin would have to close multiple weeks below this candle, right?
Wait. Let me see the chart. Let me see his tweet again. Multiple closes below the 50-week would confirm. Okay. Multiple closes below that. Okay, cool.
That means more than 1, 2 to 3. More than likely 2. 2 would confirm bear market almost. Correct? You agree?
Multiple, I'd say 3 or more.
Now we have to find a definition of what's multiple.
Well, because a pair is 2.
It's 2.
A couple is 2.
It's 3. No, a couple. Isn't a couple 3?
No, William. No.
I'm not. Hey, relax, bro. I'm asking. I'm not saying. Relax, dude. I'm not.
A couple. When there's a couple.
A couple's 2. No, you're right. A couple's 2.
A throuple is 3.
A top was 3. You're right. So we would be looking for a minimum 3 weekly closes below.
I would say that, yeah.
So if that were to be the case, we're still in a position though that the market structure can still shift and push up. This does not mean it's a guaranteed bear, like we're going to guarantee a bear market, because you can see as in prior cycles, we have dipped below, it has bounced, it has dipped below, it has bounced. We would need the
candles. Those are wicks, not actual closes.
That's what I'm saying. I'm saying it hasn't closed below it. I'm saying this hasn't closed. It has 5 days and 6 hours before it closes.
Oh, that's what that means. Okay, I didn't know that.
Yeah, it means that candle you're looking at right now still has 5 days and 6 hours before it closes for it to be the first indicator.
I see.
Right? Because then once we get to, it's more than one, like once we get to the 2 week, then you can start assuming that maybe this is, as he's calling, the bear market, the market top.
I mean, I don't think he's calling the market top.
I'm saying if you could. Well, I'm saying if it were to do what he's saying, he's calling market top.
Yeah, correct.
What I'm saying is, it still has time to do that, to not do that, right? Because this also means that if we get the second week and the third week are green and they push back above the 50 week, it would just mean we had a drastic correction. And the market has now started to push up again.
Yeah.
That's what I'm saying. I personally think we can still close above it if actually things settle down. At least more than settle down, there is better clarity in government and everything else. Because I think that's what's currently hindering. Because, as always, Bitcoin is on that riskier side of that asset curve. I think people just move money out first. The riskiest.
Yep.
That's yes. I mean, if perception matters, okay.
Yeah, of course. I'm not. Yeah, I wasn't like arguing or like trying to start something with you. I'm just saying. Perception.
No, you were. You were.
No, it's not directly to you. This guy's.
You were.
Thinking about him now.
I'm ready to fight.
No, this is more so for the viewers, William. It's a perception. It's a perception that it is on the risky side, but it's not. 4 years.
Okay. I'm gonna stop sharing. I don't know if what you're saying works like that, because if the majority of the people perceive it to be a riskier asset, and it still plays as a riskier asset, it is still not a risky asset.
Why do you say that it plays like a risky asset? Because it's volatile?
I mean, people would consider anything that moves 30% risky.
So volatility implies risk.
I would think that isn't that part of the equation of risk?
Honestly, I don't know what the part of the equation is for risk. I think that's now that you mention it, because like I should know that risk equation. Yeah, so there's the one that I see here is like more so security related. Risk equals threat times vulnerability times cost.
Look for assets. You have to look for asset risk, I believe.
Asset risk equation. So the asset risk equation is commonly defined as the product of the annual probability of failure and the consequence cost of failure, which is not a formula. Product of annual probability of failure and the consequence of cost of failure. So let's say that probability of the failure. Fundamentally, Bitcoin has not failed 4-year cycles.
This is true. I'll give you that.
So on the 4 years time sense,
it would be
no risk or very little risk.
Maybe low risk or lower risk.
Yeah, you can't say no risk because there's always risk in something.
No, I think maybe that formula is wrong. I think volatility should be part of an equation like that, though. The reason I say that is like the whole thing with that was going on with gold. Everyone's saying, "Oh, gold has outperformed Bitcoin this year," but then if you span it out 10 years, it's not the same.
Yeah, so that's the thing. If you include volatility, then you also have to include time.
Yes.
How much volatility in how much time? Because a lot of volatility in a little bit of time, very risky. A lot of volatility in a long amount of time,
less risk.
Bitcoin's case, less risk.
Correct. Yeah. So I would say it's probably closer to from high risk, maybe in the proper definition, maybe even medium to low risk.
Yeah, I define Bitcoin as low risk. It's perceived to be high risk.
High risk. Yeah.
That's why I said perceived. That's why we're down this rabbit hole.
Well, I mean, if you account for time, though, that it does change. It does make it more high risk.
Yeah, of course. That's why, like, if you're gonna be getting into Bitcoin now, it's super risky.
Correct.
If you need money tomorrow.
Correct.
Or let's say a year or 2 years. Anything less than 4 years.
Yep. That's a safe. Yep. 100%. I also think that was a well worth breaking down of definitions there.
Oh yeah, of course. Yeah, you got to have the clarity discussion of how we define certain things so that we can all be on the same page.
So I actually want to, before we move off of Bitcoin, I want to move to that 50-week Benjamin Cowen was talking about. Let me hide something so we can look at it at a better. So we can look at it better. Hide this and and hide this.
The last 20 minutes of this pod have really gone by really fast for me.
Me too.
I'm surprised. I looked at the time. I was like, "There's no way we were already this far in."
Awesome sauce.
That's good.
Yeah.
Time flies when you're having fun.
So, real quick, but this will be my last like Bitcoin chart thing before we move into everything else, because I couldn't see on his chart, so I want to see it on my chart. So, this was 2021 cycle top. So this is where essentially it broke down.
This is the 50-week moving average.
Correct.
Lovely.
This is 50 weeks. So if you look at it, it basically started giant wick, push up, and then it just basically went down. But like you said, it did close below it right here and immediately did push down, did retest that 50-week again, and immediately rejected and bear market. And you can see it very clear, broke out, pushed up, and then did what it always does. Went sideways. This was this extended period of time we had going sideways in in 2024. It bounced off the multiple times it touched, broke out again, bounced off, and now we are officially in that, what are you saying, danger zone.
Mm-hmm.
So for this to not be critical, we would have to have at least multiple candles above the 50-week for him not to be calling it to not be calling bear market as of right now.
What is the 50-week at right now?
Right here.
102. Oh, it's a orange line. 102.
It's the orange
910.
Yep.
So Bitcoin would have to close above that.
Would have to close above that.
For this week.
And not, I would say even for 2 weeks. I would have to close about it this week and the following week.
Well,
move away from it.
At the right now we're more so just looking for this week, because if you go back to the other like candles that did touch it, like they just touched it, and then if you see that they touched it, like right after that, green candles.
But this is what I'm saying though. Here though, where see, because it bounced off. Here closed a little bit, bounced off, but when it officially broke down, it closed red, open green, but it's still the last candle did close below it and immediately went down.
Yeah, but okay, so now my question is, these two candles on the left, July-ish? No, further to the left. On the bottom, before the run up. Further, the next two. Those two. Mm-hmm. Would that first red one be technically closed under the 50-week moving average?
It did. Yep, it closed under it. That's why I said multiple. Mm-hmm.
So that's why that's a pair, right? Oh no, because the other one closed above it, the green one.
So let me add some candlestick lingo here. So this candle was a hammer candle to the downside, meaning the body closed red. Right. The second candle, typically after a red hammer candle, will typically also end up red. As you can clearly see, it did end up red. However, there was enough bullish momentum in this time frame that this big green candle, the reason you can Monday night quarterback and look at it and go, okay, the reason we pushed up is because this green candle that followed this red candle engulfed the previous red candle. Mm-hmm. Meaning the volume and size of it were fully filled whatever this candle was before.
Yeah, way bigger.
Way bigger. And surpassed and closed above, which it gave us this push. Mm-hmm. Right? Then when we go to this candle, before we officially enter, before we start speculating that we're going to close below and bear market, we have big red candle downward. We have a green, what you would call a doji candle, meaning an indecisive candle. This indecisive candle was then followed by a red candle that did not engulf the previous candle, which is why you can probably speculate that the previous candle was green, but it didn't. And the previous the following candle engulfed the prior, but not completely, because it was pretty much even at the bottom. It just engulfed the top of it. And then we just had back-to-back candles that were just the same size. Essentially, Bitcoin opened down here, closed up here, closed around here, and the previous candle wicked up, came down, and closed here.
Yeah, but so that red candle, the second one, would be the third candle that closed under the 50-week moving average.
I think in this situation, this would be the third. Well, preface,
it's third.
This candle closed above it. That's why it's here.
Yeah.
So this would be the first candle that closes below it.
No, the red one before that.
Yes, Alex, I understand what you're saying. The middle one is green and it closed above it. Did not close below that line.
But the red one before the green?
So it's not but I think it has to be consecutive.
No, I don't think it has to be consecutive.
I think it definitely has to be consecutive.
Because we also have that red one over here. The one that we were talking about earlier. Yeah, that one.
Which one, buddy? I lost it.
The one right in the middle. That one.
This one?
That one, yeah. Monday 12th, June 21st. That's one. That's two over here.
And
way
it pushed
further.
up. Yeah,
but look. Okay, that's fine. It pushed up. But that's one. Two over here.
Alex, further. This one didn't close above. This one closed above, not below.
I know. I'm strictly talking about the red candles.
Okay.
First candle. Go to the next red candle. That's the first one, yes. No, the next red candle that closed under the MA, the 50-week moving average.
This one.
Second candle, and then the third candle.
Dude, you can't. I don't think it works like that, and I will say why. Is look at the time frame though. If you count this one as number 1, July 21st. If you count this one as number 2, December 21st.
Oh, that's a whole year apart. Oh no, half a year.
Is it? It's yeah. They're like all this market structure occurred I think I will give you this. I will like if you want to give it. I'll give you that.
I'm just kind of like trying to interpret what.
I'm with you. I'm also trying to interpret it because I'm also he didn't specify if it's consecutive or not, right?
Mm-hmm. So Cowen, if you're hearing this, like, help clear this up for us.
I want to know too. I would assume this is 1, this is 2, and this is 3. Or as you're saying, I would even consider 1, maybe 2, and then this would be 3. Mm-hmm. I don't. I'm with you though.
In that sense, they would be much more closer and much more like.
It makes more sense. I assume consecutive. Exactly. I assume it's easier to call like we're gonna go down 6 months out or 5 months out. Mm-hmm. I would assume closer together. But nonetheless, we are in a predicament here. This candle has 5 days to close above. And we'll have to see what happens at that point, right?
So so then here's my like counter argument to this.
Let's go for it.
So you see that green candle right above that purple box that you got right there?
Which one here? Which one?
No, oh my bad. The lower purple box. March.
This is a red box. This is a red box.
Oh, I see it. It looks purple in the middle. But anyways, the green candle that touches that, the wick,
right?
The green wick that touches that. Yeah. So that wick drops all the way down below the 50-week moving average.
Mm-hmm.
Clearly. And then closes in the green, and then you see that the market shoots up after that. The candle that we're on now hasn't closed yet.
Nope.
So it's very possible that it closes in the green, and then we see a run.
Potentially. But I want to
very possible, but that's just highly speculative.
So for it to close in the green, it would have to close. It would have to move 10.42% up.
Lovely.
Because it has to close. Because it has to go up. Because it has to go above where it opened.
Yep.
So it opened and has to consume that wick. So it has to go above 110,000
to close in the green.
And mind you, so to just add some nuance to this, this candle was a very decisive candle. It wasn't an engulfing candle, but it did just so we can add. It did. This red candle before took the liquidity from the upside of the prior 2 candles, right? Or not really, because this was already hit. So it took liquidity up aside, went down, didn't take liquidity from the bottom. The next candle that followed took liquidity from the downside and closed very aggressively upwards. Did not engulf the previous candle, but did consume the body of the previous candle.
Yep. So you don't have Cowens text up anymore, right?
I can. Yeah, I have it. I can share that.
My question is, did he say closes below 50-week moving average?
Yes, he said closes below 50. That's
So even if this candle does close red.
So preface, multiple closes below the 50-week would confirm the top being in, as it always has each cycle.
Okay, so ultimately, for this candle of concern, it's Bitcoin has to be above $102,915 in the next 5 days.
Correct.
Which
next 5 days. Sunday.
November 9th.
Sunday, right?
Mm-hmm. November 9th.
Yep. It would have to close above that. Which is
strong.
I wouldn't even say to stay strong. I would say to save ourselves one more week of a potential downside, right?
Yeah, exactly.
But that's what I got for charge. I personally don't think we're still bear market. I maybe I give it to Cowen. Maybe we do have to close below twice, and then things hit the fan.
Mm-hmm.
Or this may be the first time we close below consecutively. We do push down maybe to that lower region of what? Right here? Maybe this lower region of 92,000. The rate cuts keep on coming in. Shutdown ends. U.S. doesn't have to pay back its tariffs. Everything gets better. New tariff deals come along. Everything calms down. We get a new push up, right? That can happen. Highly unlikely, yes, but I'm sure that some of those things will have to happen sooner rather than later.
Yeah. That's exciting. Gets me on the edge of my seat. Wondering what's going to happen.
Mind you, a lot of experienced veterans in trading and have run their own bigger YouTube platforms or whatever are saying they're a lot of them are either out of the market. They're very being cautious right now, and some are like, this is the next opportunity. This is the next like build up for the next run up, right?
That's funny because that's where I stand. I literally bought Bitcoin today. I saw it dropped below 100,000. I was like, all right, time to buy.
It's one of those things that the bull market will continue once everyone believes it's no longer there. Once everyone believes it's over. And we never know when that is, right? To add context, we are currently sitting at 21% fear and greed index. Extreme fear.
Extreme fear. Which is
meaning if we were to go to the teens, the next move, either up or down, will be strong.
Yeah, it'd be decisive.
It'll be it'll be a decisive move, no matter which way it goes, which is scary.
Fun. It's exciting.
So, also,
this is where people get their gambling addictions from. It's like, whoa, what's gonna happen?
So I had more charts to talk about, by the way, because I have to share just because. Just like structure in Bitcoin and just like market, there are a lot of things that are, as of right now, minimum should be a push up to the upside, either a small one or not, but a push up of some sort. So this is Binance BTC USDT liquidation map. This is the current price. Well, this was the current price as of let me refresh it. Okay, so we're currently sitting around here. These are current long positions to be liquidated. There's barely any volume. There's no real size. It's literally all been taken out since yesterday. And that flash crash that happened. We're currently sitting at all of this liquidations to the shorts. Meaning if price were to push up, this is what's there to be eaten up by, and here are the prices that would get these are the shorts that would get destroyed towards if the Bitcoin were moved to the upside. This pile right here, this center, is where there's a lot of liquidation levels, which is about towards the high end, towards like the really meaty end. It's 105,000. So we can very easily see a Bitcoin push to 105 because the liquidity is there for market makers to make their money.
Yep.
Because there aren't a lot of heavy longs. It's people are heavy shorting right now, or are heavy short. And just to end it, going to liquidation heat map. It's loading. There is really little liquidity left to the downside. There's a lot of liquidity left to the upside.
Yeah, there looks like there's a really strong amount there, 108.
Yeah. So there is a good chance that we can potentially close the week to the upside if market makers decide to take out this liquidity that's left towards the upside.
Yep. It's
literally a waiting game. What's up? What you want?
Is it possible to like rewind that particular chart to like 12 o'clock today? So before the red candle started coming in?
Oh, I don't think so.
It's coin on, right?
So let me add the daily. Okay, I have it here. I assume this is the one you want, right here?
Yeah. Yeah, but I guess what I was trying to see was, what did the heat map look like before all these people got liquidated?
It looks like this. This is what it looked like. These are the these are the levels that were there prior.
Okay.
These are not new levels.
Mm-hmm.
These were levels that were taken out as price moved.
Okay.
Get me? That's why these, if you can tell, these are untouched because nothing has moved to take them out.
Yeah.
So these are all the prior levels that were taken out by the move. So if anything, this would be where the price moved down. It took the liquidity of 105 and immediately ate all the liquidity to the downside that was left. So essentially, it flushed this down. This is the new liquidity that was built up, and now a move. You can, as of right now, you can assume a move up from price from where it looks from where we're currently standing, to say the least.
Yeah. Exciting, fun. Which way is it gonna go? You guys let us know. Or let us know.
I took a long here.
You took a long. He's long Bitcoin, guys.
I'm a terrible shorter. I'm not a great trader. By no means I'm garbage. I'm only good at losing money. But you don't make any money if you don't try, right? So I definitely took a long at this level. I saw it in my other chart. I'm like, it's retesting prior all-time high. It's done it once. It held. This one got close, did not do it. And I took another one. I'm like, if it doesn't break below it and doesn't close below it yet, we're still in the safe zone.
Are you showing us something?
Oh, I was. Never, whatever.
Looks like he's...
I was, whatever.
That's funny.
But yeah. That's what I got for Bitcoin price.
That's exciting.
Stocks are shit, by the way. Stocks are also getting beat up right now. Stocks are also fearful, even though stocks have all made new all-time highs recently.
Interesting.
Very.
I mean, like, I think I saw this video of, and I want to say he's from Harvard. This professor from Harvard. Might not be Harvard. Nonetheless, a man with a doctorate's degree in economics.
Smarter man than us.
Yeah, 100%. He's like, it took him all this time to make the realization that although stocks are all-time highs and like prices of these assets are higher than they've ever been, when it comes to like inflation, he's like, holding your assets in the S&P 500 for 30 years doesn't really make you rich. Like, at best, what ends up happening is you stay at par with inflation. I might be like butchering it a bit on how he said it, but ultimately what he was getting to was like, even saving long term in the stock market doesn't really work out super well for people, as opposed to the way that Bitcoin works and how it has actually saved against inflation.
I'm gonna give a little pushback. I think for the normal people who are fearful of things, I think the stock market, the S&P, has been the best bet for the last, what are we in 20? Like, if you discount the last 10 years of Bitcoin, it's been the best bet you've had to do better than inflation.
Mm-hmm. Bitcoin.
Huh?
Bitcoin or the S&P 500?
The S&P. Like if you before Bitcoin's inception, the S&P has been the best asset to have.
Correct.
And until I would say until very recently, a bigger mass of people have realized that Bitcoin has been a better performing asset. But we also have to take with a little bit grain of like a little caveat that early access to Bitcoin was much more difficult than it is now, right?
Mm-hmm. Okay, so I found the guy of the video. He's a former finance professor of NYU Business School, not Harvard, New York. His name is Ted Smith. He was also former CEO of Sotheby's.
Mm-hmm.
He says took him more than 25 years teaching finance to realize that all the S&P 500 returns were coming from the money printer. If the money printer grows 8 to 10% annually and the S&P 500 returns about 9%, it's just treading water. So essentially, it's like, sure, you're getting 9% from the S&P 500, but then the money prints 8 to 10% every year also. It's like you're just keeping up with inflation, so to say.
Yeah, I'm not disagreeing with you. I'm just saying that's been the best bet you've had for the last X amount of time until Bitcoin. That's it.
Until Bitcoin. Yep. Yeah, well, that was the point I was trying to get to.
Yeah, until Bitcoin, that was your like, and also what I'm also adding is you also had that learning curve of what is Bitcoin, how do you get it, how does it work, like, you know.
Yeah, I mean, but that learning curve also applies to the S&P 500 or to stocks in general, but it's been around longer. There's more content on it, like there's more books, there's classes that have been going on for way longer. It's been a much more developed
that's what I'm saying
tool. Bitcoin is newer, correct. It's harder.
I'm just saying we had the S&P did not have the learning curve for the last 50 years versus Bitcoin had the learning curve the last, I would say, even 8 years, right? Your people are still learning.
Mm-hmm. I mean, people are still learning about S&P 500 and stocks in general, but completely different fields.
That's just financial literacy.
Yeah. Mm-hmm.
That's a bad practice on schools and everyone else not doing better jobs at teaching some sort of financial literacy. Even if people don't pay attention, like in high school classes to it, because you never pay 100% of attention. But I'm sure if people were to talk about it, it would be like one of those things that you just naturally remember.
I mean, yeah. So the way I've come to realize about the concepts that I didn't understand back in high school is that although I didn't understand it back in high school, like really understand it, now at the older age, it's like, oh,
it's still there.
Like now it's clicking better, but it's better to have some knowledge than no knowledge at all. My opinion. Yeah. I don't know. I think other people, different thoughts.
Yeah, I mean, even though people would find it boring, some of that info still stick. I mean, I guess at this point it doesn't matter, but I'm talking about professors. I had a banking professor for one of my finance classes. He was we were learning banking. I told you about him. He was saying Bitcoin's a scam. It's 100% garbage. But then you had this other NYU professor saying the complete opposite.
Mm-hmm.
So we have two different schools of thoughts here. Both are teaching young people, for the most part, with two completely different ideologies.
Well, okay, to be fair, I don't know if the guy said anything about Bitcoin. All I know is what he said about the S&P 500. So not so much that Bitcoin is better or like not a scam. He just said that the S&P 500 just kind of keeps you in pace with inflation. Doesn't necessarily make you rich.
Okay, no, because the way I interpreted it was that you made it.
I did say that, but then after reading it more,
mm-hmm.
I wanted to make that clarification also because since you brought it up, he never specifically said that Bitcoin was the answer. That was more so like my draw from that.
Yeah, But either way, I am sure there are professors who have taken the Bitcoin stance, say no, Bitcoin is this, and have actually like explained it to some level in their classes as much as they were allowed to do. Right? I'm sure there are like limits to how much they can talk about, like teach things that are.
So I'm taking classes in the College of Computer Science. My professors are computer scientists, and for the most part, they don't talk about Bitcoin as a financial instrument. They talk about it as a technology, how it works, how can it break, what can be done to make it better, and like that sort of deal.
I mean, they're also more tech classes, so it makes sense to talk about it in that way. I'm sure.
Yeah, of course. But I mean, like, as us out, because none of my classes have really covered. Only one of them has covered blockchain. And that was literally an encryption class because blockchain ciphers are part of encryption. Yeah. But like even outside of the class, he told me, he's like, no, I mean, we don't talk about it. And he's like, I'm not going to talk about it as a financial instrument either, is what he said. But
I don't think he can't, though.
Yeah, it's safer to avoid talking about financial stuff.
I mean, I would say it's safer just because it's not his realm, right? As a, I assume as a teacher, you have to stay, I believe, somewhat in kind of like your field of knowledge.
Yeah, I mean, that's not to say that he doesn't own Bitcoin.
No. Yeah, 100%. I'm just saying like he won't just like talk.
He won't openly talk about it as an investment option. He will talk about it to students as a technology, but not as an investment. Conversation.
Yeah. I mean, back to my professor. He didn't want to talk. He would mention things.
Just straight up said that was a scam.
He said one, it was a scam, and I immediately rose my hand. I'm like, that's not accurate. Because he brought it up. He brought up that Bitcoin it's only good for like money laundering and all these things. I'm like that's inaccurate. I'm like, the majority of money laundering is done in dollars. It's less than 1% in Bitcoin, and I also state, I'm like, it's also outperformed the majority of assets in a 4-year cycle term. In 4 years, it's always outperformed. So you may not like it or you don't want to like it, but it's an outperforming asset. Like, there is no way around that.
Yeah. Professors, or better said, not so much professors, people that are...
He was also older.
On the older side of things and a little bit more antiquated, less familiar with stuff. They're just going to regurgitate whatever they hear.
It's also like that thing we talked about, that it's like how much time you have spent with something influence your comprehension of something newer.
I mean, it's also a big thing is just what era you're in and like how things are working when you're growing up. So pretty much similar to what you're saying. There's perceptions that are just different.
Yeah.
So, for example, like I don't know if your parents are like this or like your, but my dad in particular, he has said, he's like, I rather have a wallet with cash that I pull out and pay, because that's how he knows. Like, it clicks in his head, money's leaving his pocket. And then he goes, oh, once they created credit cards and debit cards, he's like, now you just tap this thing and the money's gone, but you don't realize it because you're just tapping or like inserting the card. He's like, you don't see the money leaving. But I told him, I was like, it's actually different, because for the people our age, they don't see the money that they have in their pocket so much as like money. I mean, it kind of depends also, because like there are people who work more in cash heavy transaction businesses. So like, let's say people in the service industry, they're going to deal with a lot more cash. So they do have a stronger tie to like money leaving their pocket when they pay in cash. But if someone's only getting paid in direct deposits, never has to go to a bank because everything's digital, the money that they just have an account that they know the number on. Does the number go up? Does the number go down?
So it's funny, because I would say my girlfriend's parents are they have like a 10-year gap of age, and you can tell like the difference between the two because her mom is very like comfortable. Like she really only pays with credit card, or really only credit card. Not even that. She only uses her credit card, and her dad is more of a like not hesitant to use his credit card, but it's not his first thought for most. Like there's a certain amount of spend that his brain has to go through to be like, oh, this requires a credit card, versus there's this amount of spend where I'm like, oh no, I'll just use my cash.
Mm-hmm.
But you can clear like it's not the same thought process.
Yeah, but like that has to do with like era when you were raised, what industry you're in, and like stuff like that. Because like for me, every time I tap my phone, if I'm using like
it hurts.
Pay,
you know
like,
it. You feel it.
I know what I'm doing. It's like it's not lost on me because my dad would say that it's lost on us. He'd be like, oh, it's like you're just tapping away. I was like, no, I know what I'm doing.
Yeah, like if anything, when you spend cash, you're like, this is free money.
Exactly. So like, if it's cash, it's like I got this because I requested $40 back when I went to the grocery store, or whatever, in cash.
Yeah, and you forgot about the 20 you didn't spend, and now you're like, oh, I have a free $20 bill.
Exactly.
Yeah, 100%. I agree with you. Like one time, I found like $200 in one of my drawers, and I was like, I just made $200.
Mm-hmm.
I was like, these I could spend these $200 and it will not affect my life, because I never like, to me they were gone on me.
Yeah, it's like that. It's like some pocket money.
Yeah,
it's like, hey, change. It's like the change that you. I guess the people is like the quarters that you found in your couch.
Yeah. Oh, sorry, I took all the airtime this episode. I apologize.
Yeah, honestly, like I had a fun time because I didn't even realize the time flew by so fast.
Dude, yeah.
Well, if you guys are watching this before Sunday, November 9th, be praying that the can, and you're invested in Bitcoin, I'm assuming. Be praying that
and be praying you're invested in Bitcoin.
Yeah, also
because altar gonna hurt no matter what happens.
So hopefully the candle closes above 103,000 to be safe. 103,000. Hopefully all those liquidations up to 105 gets hit, and all those people lose their money. Unfortunately, but that's just what you signed up for when you're betting against Bitcoin. That's gonna be my stance on that one. If you've liked this episode so far, smash that like button. Write us a comment. Let William know how beautiful he is, and press subscribe if you can. If you want to see us every week, because we do this pretty much weekly. There have been some times where we've been a little.
We do miss weeks sometimes because things happen,
but that's rare.
There was a good stretch where it wasn't that rare. I can't have him lie to me like that.
That is true. That is true. And well, the thing is, neither of us are lying, but. Yeah, there was like a 2-month period this year where we were like a little off and on about it. Rough schedules. Anyways.
That's it. It's been another week.
Your favorite crypto podcast.
Sometimes crypto.
The unscripted.
Crypto podcast.
Ayo.